Thank you so much for coming and spending time with us.
Absolutely. Thanks for having me on.
Yeah, I'm going to rapid fire some questions. Are you ready?
Let's go.
Okay, so we have a first-time home buyer. They want to know, like, how much do they have to put down?
What it comes down to is what's the minimum down payment required is depending on what kind of program we're going to target. With FHA, you can put down as little as 3.5% down. With conventional, you can put down as little as 3% down. Not many people know about the conventional doing 3% down. There's also great programs out there for down payment assistance where it can actually cover your minimum requirement investment, and then meaning you have to bring in less for your down.
Okay, so a lot of people are wondering, what do I need to qualify for a loan?
What most lenders are going to look for is a 2-year work history. It does not mean you have to be at that job, the exact same job for 2 years, but they want a 2-year work history. Next, you're going to see how much you have for a down payment. If it's going to be a gift for a down payment, if it's down payment assistance, they want to know what kind of capital you're going to be bringing in. So typically what you need to qualify is at least 2 years of W-2s, 30 days of pay stubs, and then the last 2 months sourcing any cash to close.
How does somebody go about qualifying for down payment assistance?
So depending on the different types of programs, there's a whole bunch of programs out there for down payment assistance. Typically for a big popular one here in our state of California, there's one called Cal HFA. Now Cal HFA, the biggest requirement is at least that one of the borrowers is a first-time home buyer. That's a requirement. Next, they're going to look at your type of income. So if you have too high of income, you may not qualify for certain programs, but you'll be surprised that the income limitations are really generous. So most people do qualify. And next, with Cal HFA, they have some property requirements. So depending on what type of property you're going to buy could either be eligible or ineligible, and that's something that we hone in on. But typically, they want you to be a first-time home buyer, have some decent credit, usually around 660 to 680 and above, and be within those income limits.
Okay, another question that people have when they're buying a house is, who pays the closing costs? Like, how much are they? It's like this anonymous figure out there. How does that go?
Yeah, it's a great question because oftentimes most people just look at the down payment percentage and then they just come up with that as that's their cash to close, when really their cash to close is built up of their down payment plus closing costs. Now the closing costs in itself can vary depending if you're buying down the interest rate, you're paying a bunch of points, or if you're doing some other different types of loans, those costs can vary very widely. But I would say that majority of the time, the buyer is responsible for the buyer's closing costs. So they're going to pay their own, the seller's going to pay their own. Now, if you're working with a great agent like yourself, and we are now going to make a strategy about who is going to pay for the closing costs and how that's going to be done, that's where we can start being very strategic and making smart mortgage moves to get those covered. So that way when you go to your closing table and you look at your final documents, that cash to close is much lower.
You know, I noticed that sometimes people that are trying to help that are older and they're retiring and moving, that they do try to help out first-time home buyers with closing costs.
I'm a huge fan of asking for closing costs versus just asking for a price reduction, because oftentimes you look at a $10,000 price reduction, it's not going to really move the needle in your payment, versus the $10,000 directly off your closing cost, you'll feel that in your pocket today.
So if somebody buys like a house that's $1 million, do you have like an estimate of how much a closing cost would be?
On $1 million, again, it's going to vary very widely, but on $1 million, I would say roughly between 1.5% to max 2%. You should prepare for, depending if you are escrowing. Because if you're going to have an escrow account, you're going to have to fill that escrow account. And that's extra closing cost. It's your money. It's going to be paying for your property taxes, homeowners insurance, things like that. But it is a cost. If you're waiving that escrow account, then your closing costs do dramatically drop. So
that's true, because it does include a payment and
you got to fill it all up.
Okay, yep. You're right. Okay, so if you have a first-time home buyer, before they start looking for a house, what's the step?
If you have a first-time home buyer and you're wanting to know what's the first step to make that next move, before starting to fall in love with the house, you need to really get pre-approved. You need to talk to a lender, have a good sit down, do a consultation. The consultations are free. You can get a full pre-approval done here at Loan Depot. We offer full complimentary pre-approvals. We can even take that all the way through an underwritten pre-approval, which is ideally what you want to have when you're shopping for a home loan, because then an underwriter's also gone through the file and conditioned it. But this stage right here to get pre-approved is super important, because it allows you to see what kind of budget you should be looking at. You should be looking at a $600,000 house, maybe an $800,000. And then at that point, once we start figuring out what your qualified for, then we can start honing in on what your comfort max mortgage payment is at, because that's really the key. Because you may qualify for an $800,000-$900,000 home, but that's not your comfort level, and maybe you want to be at a $750,000 home, and that payment suits your lifestyle better. So that's really the key. Is the first thing to get started is a solid pre-approval.
So if somebody has a bunch of credit card debt, is it still a good time to come and talk to you and set up a plan?
100%. So a lot of clients that I talk to, they often think that they're not ready to talk to me yet.
Yeah.
And the truth is that they should be talking to me at that stage, because what they think is that, oh, well, I have all this credit card debt. How am I going to qualify for a home? Not realizing that we can have all these be marked to be paid off at the closing table and imitate that they actually have all that debt being paid off. Yes, we're paying at the closing table. It will be paid off, or maybe we can just make it work without paying those things off. But most important is let's have that conversation to see what we need to do.
Thank you so much, Harry, for coming out and having these rapid fire questions. And if anybody would like to contact Harry, he is at Loan Depot, and his number is...
Yeah, best way to reach me is either call or text. My phone number is area code 805-459-7601.
Or you can always call me, Rané Aguilar, at Aguilar & Associates with Century 21, 805-709-3415, and I'll get you in touch with him.